Hello, everyone. Welcome to the Brazil, California Chamber of Commerce Member Spotlight Series. I am delighted to have here with us today Danilo Kawasaki. He is the Chief Operating Officer and Vice President of Gerber Kawasaki here in Santa Monica, California. Very happy to have you here with us today, Danilo. This is part of our series to really share a little bit more about what our members are facing during the pandemic and basically emphasize how important it is to continue to be connected and also to rely on our incredible network of partners and friends here with the Chamber. So welcome and thank you so much, Danilo, for joining us today.
Absolutely. Thanks for inviting me.
Our pleasure. So Danilo, let's get straight to the point. I would love to hear a little bit more, and I think our audience will appreciate understanding a little bit more about what is Gerber Kawasaki, what do you guys do, what kind of services and products do you guys have, and how you can help individuals or investors do better with their assets.
Absolutely, yes. So we are a wealth and investment management firm. We were established back in 2010, right after the financial crisis. My partner and I, Ross Gerber and I, worked together at AIG before we started Gerber Kawasaki. And, AIG back in the day was one of the few AAA rated insurance companies in the world and one of the biggest companies out there. And the financial crisis, 2008 financial crisis, basically, brought AIG to its knees. And they were basically in the center of the entire crisis. And it was kind of a waking moment for us where we realized all these big firms and big names, they really don't have clients' best interest at heart. And it created an opportunity for smaller firms like ours to compete head to head with the bigger players. And the Morgan Stanleys, the Merrill Lynch's, the UBS's, basically all those companies got caught, with the hand in the cookie jar, putting their interests ahead of their clients' interests. And it became pretty obvious that, that was really their business motto, is to make profits for themselves, not necessarily for their clients. So we started in 2010 with a few things in mind. First, clients first. Absolutely, it's our goal to help our clients achieve their financial goals. So we set up a fiduciary financial firm, which means by law, we have to do what's in our client's best interest. We don't have products to sell. We don't have an agenda. Our agenda is to get to know our clients to the best of our abilities and put together the best financial plan possible to help them achieve their goals. Secondly, what makes us very unique is the fact that we created 3 programs to cater to a very diverse clientele that we have today. Our first program is the wealth building. Most financial firms have high investment minimums, 250, 500,000 before they will talk to you. But how do you get to 250,000 if no one helps you to start? So we decided to create a wealth building program that basically caters to individuals, typically younger, who are looking to get started, who are looking to get ahead, but don't have quite, a lot of money yet. So we don't have any investment minimums under that program. If you're serious about getting ahead, save and invest your money, we will sit down with you and help you do just that. And then we have a traditional wealth management platform where we help clients who are more established and have more assets. And then we have, on the other side of the spectrum, our high net worth program. Those are for individuals who have more complicated situations. We get involved in tax planning, estate planning, risk mitigation. So, we basically, with those 3 programs, we can cover a pretty broad spectrum of clients, which kind of brings to where we are today. It's our 10th year anniversary. It was June 1st, and we were planning a big party. Obviously, we had to cancel because of the pandemic. but we have over 6,000 clients. We manage about $1.2 billion in clients' assets. So we've grown to a substantial size and scale where we're very proud to be able to serve our clients to the best of our abilities.
Excellent, excellent. No, thank you so much, Danilo. So, and this is, well, first of all, happy birthday.
Yeah, yeah.
Happy anniversary, 10 years.
Yeah, 10 years, man. 10 years goes by fast. It's
Yeah.
unbelievable, yeah.
But it's quite a remarkable achievement, especially in such a competitive landscape. And to be somewhat of a boutique investment firm, I think that's also quite significant. So
Thank you.
Happy anniversary.
Thank you.
Impressive numbers, you know, the number of clients and the asset under management. I think this is really outstanding, and I really commend you and of course Gerber Kawasaki for all the work. Danilo, when it comes to you know, wealth building, you know, right? One of your programs is kind of the entry level for someone that is starting to acquire some kind of wealth or is pursuing some kind of wealth. That person, I understand, that person doesn't really have to be rich, just have to have the ability to direct some of their income to your investment firm. Is that a correct assessment?
Yeah, absolutely.
Okay.
Yeah.
So when that person comes to meet with you, you have a number of advisors. What kind of analysis, what kind of questions, or how prepared should that person be when they come to talk to you about their wealth building program?
You know, there are different kinds of people, right? So we have clients who come in and they have all their ducks in order. They have their, you know, statements and budget. And then on the other side of the spectrum, we have clients who come in and they're a mess. They don't know where their money's going. And that's exactly why we exist, right? To help people get situated with their finances. One of the main things that we do for our wealth building clients, which is often overlooked, is to go through their budget. Okay, where is your money going? But very detailed, not like a broad idea. You know, how much money you make, how much goes to taxes, how much you're spending for your housing expenses, for your car expenses, for your paying back your debt, whether it's credit card or student loans, and then all the miscellaneous expenses, which is where a lot of people kind of get lost. You know, Starbucks every day, eating out, dining, and things like that, they add up. And at the end of the month, a lot of people don't have money to save because they're approaching it the wrong way. The right way to approach saving and investing your money is as soon as you get paid, you take a percentage right off the top and you put it aside, okay? And then you have to learn how to live with the rest of your money. And it's a concept that we call pay yourself first, okay? You and your future, you're the most important bill that you have, not your gas bill, not your electricity bill. It's yourself and your future. So by paying yourself first, take a percentage of what you make, set it aside, invest, and grow that money, and then you will learn how to live and adjust with the rest of your budget. When it comes to building wealth, it's not how much money you make, it's how much money you keep that really matters, okay? I have clients who make millions, and they spend millions, and they're no better off than someone who makes maybe 100,000 but only spends 60, right? So again, it's not how much you make, it's how much you keep. That in the end, it's what really matters.
Wonderful. Yeah, that's very helpful. So Danilo, a lot of the engagements, you know, pre-COVID-19, it used to be you would meet with someone would come to your office, or will meet you at an event, or will see you speaking at a conference, and they would you know, approach you and do all that. How has the pandemic or has it at all shifted that kind of behavior? How has your customer engagement or even the customer acquisition changed because of the pandemic? How have you adjusted to it?
Yeah, you know, that's a great question. I think a lot of businesses are learning to adapt to this new environment that we're in. Fortunately for us, it was a very easy transition. We're a very tech savvy firm. We have clients all over the country. We're registered in all 50 states. So we've, been using Zoom for a while. So it was really easy to just convert all of our in-person meetings to Zoom meetings. We already had the platform. Our advisors already, they were already using it. In a interesting way, it actually made us more efficient. Okay, we can set Zoom meetings kind of back to back, and when you are setting in-person meetings, you can't really set meetings back to back because someone is a little late, and then one conversation is going a little longer. Obviously, you don't want to have people waiting in your waiting room. So with Zoom meetings, things are kind of more efficient. So my team of advisors here have been able to actually increase their productivity throughout this entire time. We have been able to reach more clients on a weekly basis than before because, again, of the efficiency of setting, online meetings. I'm happy to say that our business has really thrived under this difficult conditions. My heart does go out to the business owners whose businesses are directly impacted by COVID, right? If you're a restaurant owner, if you run any type of retail business and you need people coming in, it's a very difficult time, and we see that in the publicly traded markets, right? Companies that have done the best during this pandemic in the stock market are digital, tacky type of firms. Companies that have struggled the most during this pandemic are companies that rely on that in-person, face-to-face interaction, right? Disney is a great company, but a lot of their revenues come from their parks. Okay, parks are closed. They were, set to reopen in July, and now they're postponing that again because of the second wave that we're seeing. So, it's a very interesting dynamic. And, again, I do feel for businesses who have not been able to operate normally because of this situation.
Great comments. Thank you, Danilo. I think a couple of points that I wanted to make. I'm happy to hear that it has been more productive. I think I agree with you, and I've been facing the same opportunities because people are just, initially. So we're recording this at the last day of June 2020. We're just now starting to hit kind of the second wave of COVID-19 here in California. There's another round of closures and additional restrictions. So, but initially when we first started, people were forced to be at home and do home office. So they were basically spending more time in front of the computer. So they were more responsive on email. And then all of a sudden, everyone had to be comfortable doing Zoom meetings and Skype meetings and all the different platforms that we have. And I think that actually helped be more productive. People are not spending time, an hour or something commuting. They're not spending time, even those minimal office interruptions that we used to have, where people would just come in and interrupt your meeting or call you to a meeting. That makes, people have way more control of their schedules and their calendars. So I agree with you, and I'm happy that this is impacting positively. Impacting
and then, to kind of complete my answer, we as advisors, we go to a lot of seminars and networking events. Obviously, those are shut down right now. So we've kind of replaced them with lots of webinars. We're putting out a ton of content every day. So if you would like to see some of that stuff, you can go to our YouTube channel, Gerber Kawasaki YouTube channel. You can, follow us on Instagram or Twitter. My business partner, Ross Gerber, is a constant person on financial media, whether it's CNBC or Bloomberg or Fox News. We are approached very frequently to share our opinions about the markets, what's happening in the economy. So we have a ton of content that's now just going 100% digital because of the situation. And because of it, we're able to reach a lot more people. And that's another efficiency that has kind of been forced upon us because of this pandemic.
Yeah, no, that makes total sense. I do want to say that I do follow actually you guys on LinkedIn, and I see
Thank
you
you.
posting a lot of
Appreciate that.
the
Yeah.
content, and I keep seeing more and more of Ross Gerber going online, and actually not online, but on TV and some of the
Yeah.
channels, Yahoo Finance or whatever, a lot of them. I like
Yeah.
his candor. He has a
Yeah.
very interesting sense of humor, very straight to the point, very
He's not
direct.
afraid to speak his mind.
Yeah.
Sometimes that's not always positive, but
Yeah.
he's that's why he gets called, because he is not afraid to say what he thinks.
Yeah.
And sometimes it's controversial, but that's what we do. And we kind of speak our minds. We have a weekly investment meeting here every Thursday, and it's quite interesting. We've actually turned into like a little show too. A few years ago, we started recording these meetings because we have some very interesting, intelligent discussions about companies, and because we're diverse, we hear so many different perspectives, right? We have people here from 9 different nationalities. So that kind of makes it for an interesting dynamic within the office. And we feel like the collaboration we have with each other is really what makes our company special. And our research is better because of it.
That's great. And then this is a great segue to one question that I had, which is you have a very diverse team. You yourself, you're Brazilian, made in Brazil.
Yeah.
Uh,
Yeah.
but Ross from the US, but I think you have Taiwanese and Israeli, and it's a very good melting pot, which is significantly representative of the diversity that is LA, right? You have so many different cultures here. Does this and you also mentioned because of the acceleration towards more digital, you expanded your reach. How are you handling international inquiries, or are you working both ways, both with international clients or in international markets?
Yes. For the first time in our history, we're now able to take on international clients. And that's because of our new association with Schwab. Schwab is an international company. So because of that, we now have access to different countries. Being from Brazil, obviously, I have now clients who live in Brazil, Brazilian citizens, and now they have been able to open accounts here with us. Obviously, there's some restrictions and compliance that we have to go through, but that's definitely a possibility. And when it comes to investments, we obviously look at the whole world landscape for investment opportunities. So that's something that we've always done. The global economy is really one big piece where the U.S. is a percentage of that piece, but there's so much out there in terms of investment opportunities. So we're not as bullish on international markets as we are domestically right now. But it's something that from time to time we kind of switch the lever back and forth depending on our research and what we're looking for.
Awesome, really great. Danilo, when you going now, so a little bit less on your clients. We're going to go back to that, but a little bit more about the markets, right? You mentioned you're not that bullish about international markets. You're more focused on the domestic market here in the US. I'm seeing a lot of shifts, and again, some of them were already happening. Some of them got extremely accelerated by COVID-19. We see markets that were starting to expand. They now have contracted significantly or have completely paralyzed. While we also see other markets expanding, right? E-commerce and home technology, telemedicine, telecommuting, a lot of the stuff, Zoom, a lot of that
Correct.
really expanded. Can you share a little bit about your strategy today, Gerber Kawasaki, in terms of your investment portfolio, or a little bit of an assessment of what you're seeing now with the market here, and why you're a little more bullish here in the US rather than internationally?
Yeah, of course. Everything we do is customized to our client's situation. So what I'm going to say here, please don't take this as a direct advice to you, because obviously I don't know your audience, individual situation. So please talk to an advisor, reach out to us. But one of the things that we do differently here is we actually manage money ourselves. We don't farm it out to third-party money managers. We do research. We put our money where our mouth is. So in the beginning of the year, 2019 was a great year for the stock market. We did really well for our clients. January started really well as well. And towards the end of January, we kind of felt like things were almost too good to be true. So we start taking some profits towards the end of January, basically, trimming some of our positions that did really well, cashing in some profits, moving them into more conservative, investments, bond investments. And then in February, the COVID situation really kind of started to get worse and worse. And, China, first, and we kind of saw what was happening there. And we were scared, and we decided, let's sell more. Let's take some more profits. So towards the middle of February, we sold some more. And then March was horrendous. March was when, basically the market crashed. To put things in perspective, it was one of the fastest declines in the market history. It took about 18 days for the market to go down about 40%. So that's a significant move, very, very violent, and people didn't know what to do. And in times like this is where it really pays to have an advisor, because if you're managing money yourself and in 18 days you lose 40%, you're gonna be feeling pretty insecure and panicky, and most likely you'll be selling, you'll be hitting the sell button. And funny enough, someone told me this recently, and I shared this with you. The stock market is the only place when things are on sale, people run from it, right?
Yeah, good point.
Everything else, if it's on sale, if it's a store you like, if it's on sale, you buy more,
Everyone
right?
buys.
If it's concerts and they're on sale, you buy the tickets. But when the stock market goes on sale, everybody runs from it, when you should be doing the opposite. And this is why a lot of people are not successful investors, because they let their emotions dictate their behavior. So towards the end of March, as painful as it was, we start buying. Okay, we had some cash, right, sitting in the sidelines. So we decided to deploy some of that cash into companies that were 40–50% cheaper than a month ago, and companies with strong balance sheets, strong business models. We weren't being speculative and buying cruise ships, or theme parks, those, we just didn't know how long this thing was going to take. So we invested in companies like Zoom, for example, Slack, DocuSign, strong businesses that will thrive under these conditions. And that proved to be the absolute best move we've made so far this year, because the market came back ferociously over the next month. So April and May were great months. And again, this is why it's impossible to time the market. And people who try to do it, they lose, because it doesn't, market volatility doesn't come with a warning sign. Oh, it's going to be volatile. No, it just happened so fast. So in basically 2 months, we got back to almost even in the market as a whole. And as a firm, we were even better than that. So right now, halfway through the year, we're back to being a little bit more conservative again. We feel like this comeback was almost too fast, and there's so much uncertainty out there. Businesses shut down, unemployment is very high. So we are again taking profits and putting some of those profits into safe bonds and cash. And we do expect a correction over the next 3 to 6 months. We feel like this presidential election that we have coming up in November is going to be highly contested. It's going to be, volatile. So we are in the camp of being conservative now, taking some profits, sitting on our cash and wait again for hopefully another sale in the stock market over the next few months to deploy some of that cash again.
That's great. That's actually part of what I was, one of my next questions was, and I'm happy, again, congratulations for all the work, because I think this really is the embodiment of why a financial advisor is so much needed, is because
Absolutely.
people tend to play with their emotions, or the market is really rough on people's emotions.
Absolutely.
And people will feel that, oh, okay, so the market dropped 40% in 18 days. I have to sell because I may lose everything. And then they
Correct.
realize, and then it's a huge loss for those investors.
And if you did sell it at the bottom, you never made that money back, right? So now you're staring at a market that has gone back up, and you're still sitting in cash, and you're like, oh, should I go in now? And then they go in now, and then the next thing happens, it crashes again, and then they lose all their faith in the stock market. They call it a scam, but it's really, they're just doing the opposite of what they're supposed to be doing, because emotionally, your emotions drive those behaviors to be contrary to what you need to be doing.
Yeah, excellent. So you mentioned, so there are a couple of things that you mentioned, and I think, the stimulus packages that are being deployed here in the United States, they're adding quite a lot of liquidity to the market. And with that liquidity, still there's a lot of volatility and a huge ton of speculation. And, but still there's a lot of uncertainty about the economic recovery of the United States and the global economy in general. So you mentioned that can we say that your strategy right now is to go back to bonds and cash, as you mentioned? And then are you going to be a little bit on a hold position, or what's your strategy, given the context that we have now with the pandemic, with so much protest, with second waves, and then with the presidential election coming later this year?
Yeah. Well, we feel right now is not the right time to be too risky or too aggressive. So, we're not like day traders, right? We're not here trying to time the market and sell everything, buy everything tomorrow. So we manage money to each client's specific situation. So if you're an investor with a 20-year time horizon, and we manage your retirement funds, we're not going to sell your stocks, today, because we think the market's going to go down over the next few months. We're going to play with your allocation. Maybe you're going to have a little underweight to stocks, so we can prepare for an eventual correction and then deploy some of that cash to buy more equities if the correction comes. But everything is very customized to individual situation. So broadly speaking, yes, we're more conservative, but we're not out of equities. We're actually, we're not out of stocks. We're looking for high quality names, companies with strong balance sheets. We're not betting on whether this business is going to survive this pandemic or not. Like, we need to know the business has enough cash in reserves to get them through the next year, let's say, if things continue this way. There's been some very positive news about vaccines and treatments this week from some of the companies that we invest in. that we're hopeful. They're saying by the end of the year. I think that's very, very optimistic, but hopefully in the first quarter of 2021, we'll have some sort of vaccine or successful treatment that will give people confidence to get back to as normal as possible. I think, we'll never go back to 100% how it was before, for the reasons that you kind of mentioned too. Working from home is very efficient, commuting, spending a ton of hours in traffic is a waste of time. So, I think there's going to be some changes to our behaviors, but, it would be, you would be the catalyst to getting back to normalcy if and when we have successful treatment and vaccines.
Excellent. That's great. Danilo, I am very happy, and I'm, I would like to encourage actually people to get connected to you guys. And I wanted to, offer you this opportunity for some of, I have friends, I have clients, I have a lot of colleagues that are really unsure about, what to pursue now, what to do now. Maybe they have some savings, but they're not really they don't want to risk too much. And because of your very tailored approach to every individual's reality, right? The situation,
Correct.
their budget, and you have a very thorough budget analysis. I really like your strategy of the pay yourself first. I think that's something that means a lot, and especially this is what people should be looking for, not their lavish lifestyle, is to really help them achieve their financial goals the way that you can prepare them to do so. Clearly there's so much knowledge. You are with a very big team but it's a lean team, right? You have a lot of people that are specialized in sectors or in specific markets or dealings. So before we go to the final question, which is, your advice to people that wants to contact you and engage with Gerber Kawasaki, just a little bit of an outlook in terms of specific markets that people should be in the lookout, or that you are maybe, and how you would be advocating for those if an investor or a potential client comes to Gerber Kawasaki. Some of the sectors that you think in the short term could be a good investment opportunity, and of course in the longer term, if we talk about urban mobility, if we talk about agriculture technology, we talk about telemedicine, some of those sectors, and e-commerce and all that, the tech involved in it. Just a brief overview of a few sectors that you feel more encouraged to working with, and then we go to the final question.
Yeah, absolutely. We right now are favoring technology companies for the reasons I mentioned before. They're very nimble. They're, certain technology, the more modern technology companies that we're talking about, and Slack, Zoom, and CrowdStrike, and companies that are kind of cutting edge technology that don't rely on face-to-face interaction. Apple is a great company, solid cash position, but their stores are closed, and their phones are expensive. So I don't know how many people are thinking about getting a new phone right now. Maybe they are. Apple always surprises. You think that there's not enough people buying iPhones, and then they report crazy numbers. I feel like those AirPods are ahead. The watch is ahead. The Apple Store is a cash cow. So there are pockets within technology that we like. Healthcare is an obvious one. It's become very apparent that we need to continue to invest in research and development for new treatments, and this pandemic is not going to be the last pandemic we will deal with, and it's going to come in different forms and shapes. So we need to pay attention to that. And then the third and last sector that I would mention is kind of the social impact investing. We're very focused on investing in companies that will better our planet. and we try to avoid oil companies and gun manufacturers and companies that just we don't believe philosophically in what they are. So we have an impact investing group within Gerber Kawasaki that focuses their research on finding the next Teslas, the alternative energy, ideas that represent some of the values that we feel are important to our society. So I think that's kind of the next wave is for clients to be more aware of where they're investing their money. A lot of people kind of buy passive index type of funds. The S&P 500 is a perfect example. The S&P 500 is the largest 500 companies in the U.S. A lot of those companies are oil companies. So when you're trying to be green and you're driving your Prius or your Tesla, but then you're putting your money in an S&P 500 fund, it's contradicting. And I'm sure that they don't know that they are investing in oil companies, but that's a big portion of the S&P 500. So it's important to know where your money is. We're happy to analyze your portfolio and break it down for you. And but those are the three areas that I would highlight for you.
Fantastic. I am very happy with this conversation, Danilo, I got to say, and I'm very happy also with the the strategy that you have in place. And of course, impacting, I think COVID-19 also accelerated more people's behavior, or at least sensitivity to impact investments. Anything related to social, environmental impact has been more on people's minds. People see, how the air is cleaner. Look at downtown LA. It's just a little cleaner.
It's unbelievable. It's blue and you can see the sky. It's not gray or brown like it usually is.
Yeah. So no, I'm happy, very happy to hear that. So Danilo, just final considerations. I think we did a pretty. I'm very happy with kind of highlighting. Remember, this is the Brazil, California Chamber of Commerce Member Spotlight Series. So we really want to emphasize the great work that you guys do. And I think the last 30 minutes has been very helpful for us to understand more about how you can help people with their finances and their wealth building or wealth management strategies. Closing remarks, any recommendations maybe we will provide at the end. We will have your contact information, or at least Gerber Kawasaki's contact information. But your recommendation for people that would like to contact you, or is maybe unsure again about their investment strategies, or unsure what to do at this time of pandemic. They might have a little bit of income or discretionary income that they would like to dedicate to investing, but they really don't know exactly what to do. So your thoughts, please.
Yeah, my words of encouragement is to just take the first step. Contact us or contact an advisor, even if it's not our company. We offer complimentary consultations. A lot of people are afraid, how much is this going to cost? It will cost you zero. Okay, we'll meet with you. We'll go over your situation. If it's a fit, if we can help you and it's mutual, then we're happy to, dive in and get started. But, the only thing you cannot buy is time. And when it comes to investing, time is the most important component. So when you have time on your side, you want to utilize it as much as you can. So take the first step, give us a call, send us an email. We'll set a consultation with you. If you're more comfortable speaking Portuguese, we have Portuguese speaking advisors. We have 25 advisors in the office, Spanish speaking advisors. So whatever language you're comfortable, not all the languages, but most languages that are more common. But just reach out and we'll be happy to help you. We really started our firm to be able to help everyone, and that's kind of like our idealistic view of how we can contribute to our society. Obviously, super wealthy people, we love those clients and we'll help them. But there's a lot of pleasure and satisfaction in helping people get started and then seeing the results throughout the years, right? And it's very encouraging to see when people start seeing the results and get excited about saving more money, and then they get raises, and then instead of spending more money, they're putting more money aside. And that's truly how you build wealth, especially for your Brazilian audience. Culturally speaking, we have a different mentality, right? In Brazil, you don't really invest in the stock market because the stock market is super risky there. And bank savings accounts typically pay a very nice yield, even though the real yield minus inflation is not that attractive, but people don't think that way. But here, if you're living here in the U.S., that's how wealth is created. It's not by just making a ton of money. It's by investing and having your money work for you. And there's a ton of examples of some of the highest paid athletes or musicians and how they went bankrupt, right? So it's not just how much money you make, it's what you do with your money, and saving and investing it is a sure way to grow your wealth over time. And we'll be happy to assist you with that. And one last thing, I just want to say, Felipe, the chamber has never been in better hands, and it's been a pleasure speaking to you. And I'm excited to see what the future holds for you and the chamber. I think LA is such an important market for Brazilians, and I'm honored to be, here today talking to you and sharing some of my knowledge with your audience.
Excellent. Thank you so much. Thank you for the kind words, Danilo. We are also very happy to have you guys as a member of the chamber. It is a very special moment for us. It's been the chamber has been around since the Brazil-California Trade Association since 1976. 1976. So it's been some time, and I think the year we're 2020. There's so much going on, and again, I think the acceleration of everything going more digital caused by the COVID-19 pandemic is really helping us. It's weird to say this, that it's helping us, but it is true.
Yeah.
That we are getting more access. We are able to do things like this, and then our reach has also expanded significantly, because now we used to be bound to catering to people that were in LA or in Southern California or in California in general, but our audience from Brazil was away from us, so they wouldn't come to visit us at an event. And although we did have events where we had live broadcasts from Facebook or any kind of recording, now it's way more efficient. We are way more efficient.
Yeah.
And we are also getting way more professional in terms of our digital efforts and our members' digital experience. So very happy to have this with you today. We will certainly have follow-up conversations on this. I hope we can make this a regular encounter where
Anytime.
we keep track of all the developments, and we help our friends and our members get a better sense of what could be done together.
Yeah.
And again, the chamber is here to serve as this platform where we connect executives, we connect businesses, we connect supply and demand. So I'm very happy to have you guys, to have Gerber Kawasaki as an outstanding member that really helps us cater to a very specific but very much needed sector of our economy. So thank you, Danilo. On behalf of the Brazil-California Chamber of Commerce, please thank everyone at Gerber Kawasaki. Special shout out to Raquel Davis. She is a phenomenal partner. She has been a phenomenal partner from a long time of the chamber. So I really wanted to just say thank you to her and to the team.
She's very special. I share in your thoughts too. Excellent.
Okay, well, this concludes our member spotlight series of the day. Thank you so much, Danilo. We'll get back to everyone shortly. So thank you so much. And please, we're going to upload here now the contact information, both from the chamber and from Danilo, so that we can continue this conversation offline. Thank you, Danilo.
Okay, take care.